I am really loving my super clean portfolio. I am much less stressed. I'm looking at the markets less often during the day. I'm able to focus on other things. For example, just look at my margin account right now. All I'm doing in my margin account is put spreads on the SPY, put credit spreads on the SPY. So every Monday, Wednesday, and Friday, I'm going to sell a put credit spread on the SPY 30 days out. So because the SPY has expirations every Monday, Wednesday, Friday, I'm able to have different 30-day expirations every Monday, Wednesday, Friday. So every trade has its own expiration. As you can see here, I've got May 8th, May 13th, May 15th. And the way I pick my strike is, of course, I go out of the money. So if the SPY is trading at 270, 280, I'm going to sell a put spread at around 250, 245. Really depends on the VIX that day. The way I choose my strike is I'll look at the money value of the put option and the call option. So if the at the money value of the put and call option combined is, let's say, $20 and the SPY is trading at 270, then the put spread or the short strike that I'm going to choose in my put spread will be 270 minus 20, so 250. 250 will be my short strike. And I go 30 days out, of course, and I collect whatever I can collect. And then I try to close it for 50% profit. So right now I've got 3 trades open. This one here on Monday, it was very close to being closed at 50% profit. But then the next day, I guess the market dropped, so I wasn't able to close it. But right now with what's happening after hours, with the good news from Gilead, it looks like SPY will open much higher tomorrow. Look, after hours, it's trading at 285. Most likely tomorrow, I'm going to be able to close this put spread here for a profit. So this one, I collected about $78. And I can see today I was able to close it for about $53. But I want to close it for 50%. So I want to close it at around $35. Pretty sure tomorrow, if SPY stays the way it does, I'm going to be able to close it for 50%. So they're all showing a small profit, but regardless of where they stand, I'm still going to sell a new put credit spread tomorrow on the SPY, regardless of what I'm going to do with these ones here that are already open. In my TFSA, you can see how clean this is right now. I still have IMGN that I'm trying to get rid of. It looks like I'm going to have to wait till July because of the covered call that's on it. I'm unable to close the whole thing for a decent price. I've got a covered call on the Qs, 100 shares on the Qs at a 203 strike expiring tomorrow. This one's not doing good because the Qs is trading at 213 or even higher actually, trading at 217. So my strike is way below the actual price of the Qs. And my cost on the Qs is 221. So I'm actually losing on this covered call trade, but the market is also reacting like crazy. The past 2 weeks, it's been going up pretty hard. Not even gradually, just pretty fast. And I've got 34 shares of the Q. So in total, I've got 134. But because I've got a covered call trade, so 100 shares is represented here alone because it's part of a covered call trade. And then I've got the 34 additional shares here. So here's what I'm going to do tomorrow because I plan on keeping the shares because my cost is 221. I cannot lose the shares at 203 if my cost was 221. So I'm going to click create order. I'm going to remove the shares. I'll do that tomorrow. I'm going to have to buy back the call option that's right now trading at $10. And I'm going to have to sell the next week's option, call option, so April 24th. And I'll try to go for a higher strike, but obviously only if I could do it for a credit. So my current strike right now is 203. I'm going to try to go for 204. See, I could do it for a credit right now. As you can see, anywhere between 55 cents and $1.29. Now for sure tomorrow, these values are going to be different. But just to give you an idea of what the plan is. 205, I can barely get a credit at 205. So I'll probably choose a strike of 204. If not, I can go further out. Let's say May 15, and I choose maybe, let's say, a 210 strike. I could do it for a credit as well. So I can go all the way out to May 15 at a 210 strike and collect the credit. Let's see if I do 211. I can get, no, it would not be for a credit, so I wouldn't go that far. So that's the idea. The idea is to keep my shares, so I have to roll the call option forward for a credit though, because I don't want to lose my shares at 203. And yeah, so that's covered calls for me in my TFSA, but on the Qs, so on something super, super safe, something that consistently goes up, something that's composed of Apple, Microsoft, and all the big tech names. So it does not get safer than that. In my RSP, same thing, but I'm doing it on IWM, so it's covered calls on IWM. So I've got 100 shares of IWM. My average price is 151. Right now, IWM is, after hours, it's trading at 122, but my strike is 124. So I've got a covered call on IWM at 124, expiring April 24th. So not tomorrow, but next Friday, I need IWM to stay below 124. So we are rallying in the past 2 weeks, but I don't think it'll last because this is ridiculous. So if we get a correction next week, then I should be safe. Even today I was safe. Today the IWM closed at 116.91. So this really is just ridiculous how fast we're going up. So I don't think it'll last. And I've got 37 extra shares of IWM. So in total, I've got 137. So these are my positions in my RSP. I'm going to get rid of Bombardier. The call option is gonna expire worthless tomorrow. And then on Monday, I'm going to sell the shares at whatever price I can get. Right now, look at it, it's 42 cents. I bought it at $1.82. So this is going to be a big loss, but what can I do? I'm going to take the money and just buy something better like MasterCard or even some more IWM. But I really like my portfolio right now. It's so much cleaner, much less stressful. So my RSP is just IWM, just the Russell 2000 index. It always goes up over time. And the way I'm trying to generate income from it, or maybe make more than the general market, is by selling covered calls. So that's what I'm doing, selling covered calls for a credit every week. That's my RSP. And then in my TFSA, same thing, but on the Qs. I'm actually thinking of converting from the Qs to the SPY. So depending on how long I can keep rolling the call option forward for a credit, maybe I'll just sell the Qs, get out of the Qs, and immediately buy the SPY instead. What I like about the SPY, first of all, it represents the general market. It's the top 500 stocks. But what I like about it is that it has 3 expirations per week. So if we look up the SPY option chain, you can see that it has 3 expirations per week: Monday, Wednesday, Friday. So I could sell a call option every Monday, Wednesday, Friday, the same day. So it gives me more flexibility, more maneuverability. Because right now I'm selling covered calls on the Qs and IWM, but weeklies, and a lot can happen in a week, as you could see. For example, on IWM, when I sold a covered call at 118 initially, IWM was at 110. So it had 4 days to go. In my mind, 118 is quite safe. It ended up going way past 118 in 4 days. So just ridiculous. So what the advantage of the SPY is, I could sell a call option same day. So usually in the same day, not a lot can happen. So if the SPY opens at 280, for example, I can sell a call option at 283, 284, 285. As long as I can collect some decent credit, maybe 30 cents. But if I could do that every Monday, Wednesday, Friday, plus take advantage of future capital appreciation, and I think the SPY pays 2% dividend per year, while the Qs here, let's look at the dividend rate or dividend yield for the Qs. Yeah, so dividend yield for the Qs is 0.76% per year, but the SPY has a dividend yield of 2%. So I might just do that. I might just switch from the Qs to the SPY in my TFSA, which is not I can't really consider it as a loss. I mean, it's the same thing. They usually move in the same way. I can't believe all the positions I used to have. It was such a headache, such stress, and really worthless. Right now, I just have to worry about the general index. I just look at the general market just to get an idea of what's going on with my portfolio. It's so much easier to manage. And if I want to try to beat the market, I'll just sell call options against my positions. And to satisfy my trading side, I'll use my margin account, where I'll be doing put spreads on the SPY every Monday, Wednesday, Friday, out of the money put spread. So what's great about it is, for example, this one here, May 8th, my short strike is 245. So as long as the SPY trades above 245 come May 8th, I'll make the same amount of credit. And when I placed this trade initially, the SPY was trading at around maybe 270. So it gives me a lot of room to be right. The SPY could stay at 270, could drop a little bit, 265, 260, even 255. It could go higher as it's doing right now. And I'll still make money as long as it happens, and as long as on May 8th it stays above 245. And I don't even have to wait until May 8th. As time goes by, I collected about $78 for this trade. As time goes by, the value of the premiums drop if the SPY stays at the same price. So I can close the trade earlier for, let's say, 50% profit. Even more, what I like even more about this is if the SPY drops, remember I'm selling every Monday, Wednesday, Friday. So if the SPY drops, VIX goes higher. So if VIX goes higher, premiums go higher. So if the SPY drops, yes, my put spreads that are currently open get in trouble. They have a less chance of winning. They might become even a loser. But I'll manage the losing put spreads by selling call spreads against them. So it acts as a hedge and reduces max loss. But as SPY is dropping, I'm continuing to sell a put spread Monday, Wednesday, Friday. So my next put spread becomes even stronger, has an even better chance of winning because VIX is higher, premiums are higher. I can go even further out, making my trade a high probability trade. As long as I stay consistent in size, I don't increase my size, I keep my size small. I'm doing one contract every Monday, Wednesday, Friday. Before the market crashed, I was doing 3 contracts, and I was doing it almost once or twice a day, especially when the market was crashing. When the SPY was dropping a few points, I got excited. I sold another put spread because I didn't know that it was going to continue crashing. I thought this was a good deal. While SPY dropped 5 points in one day, we haven't seen that in a while. So I sold another put spread instead of sticking to my plan of Monday, Wednesday, Friday. So from now on, this is what I'm doing. I'm sticking to my Monday, Wednesday, Friday plan no matter what happens on Tuesday and Thursday. Even if the SPY drops nicely on Tuesday and Thursday, I'm sticking to Monday, Wednesday, Friday, 30 days out, managing the losers and closing the winners at 50%, and we'll see what happens. So really the only concern I have right now, even with this clean portfolio, is the Qs here, because my cost on the Qs was 221 and right now the Qs is at 217, so it's way past my 203 strike. So that 203 strike limits my capital appreciation. I have to sell my shares at 203, and the only way I can avoid selling my shares at 203 is to buy it back. But I sold it for 353. I have to buy it back for 10, so that's going to be for a loss. So to mitigate that loss, I'm going to sell another call option for the following week. So now for me to avoid losing on this trade, I'm basically postponing or giving myself time until the Qs come back and drop. Now, who knows if that's going to happen, right? It could continue up straight, like in an arrow, or maybe it's going to drop. Who knows? A lot of people are saying it's going to drop, giving it weird technical analysis names, dead cat bounce, or a head and shoulder pattern. Anyways, we'll see. But I'm definitely less stressed over this portfolio than I was before. So let me know what you think in the comments section below. Let me know what you think of the put spreads. And I am continuing to do daily put spreads. So because the SPY has expirations on Monday, Wednesday, Friday, if the SPY opens at 280 on Friday, for example, I'll try to sell a put spread on the SPY at 275, same day expiration. Because of the probabilities, I know that there's a good chance that it doesn't close the day below 275. In fact, I had this trade on Monday, SPY April 13 expiration, 270 strike, collected $50 and closed it for $16 same day. Now imagine if I do 10 contracts or 20 contracts. It's the same trade, same effortless trade. It's just scarier because it's more capital required, but it's the exact same trade. And instead of making a $30 profit, I could make a $300 profit if I had just increased the contract. So that's something I am considering. Not too sure if I'll do 10 contracts or more, but it's definitely an opportunity. I definitely see it as an opportunity. So just wanted to share with you my portfolio. Let me know what you think in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. A lot of people ask me, once they open their account, where can they get their own referral code? So all you have to do is go under accounts, instead of being under the trading platform, go under accounts and then go to account management, go to refer a friend, and here you could see your referral code. So this is my referral code, but if you go to your account, you could see your own referral code. And here is what you get when you refer people. So if you use my referral code, for example, you will get, if you deposit $1,000, you'll get $25 back. If you deposit $10,000, you'll get $50. If you deposit $25,000, you'll get $75 back. If you deposit $50,000, you get $100 back. And if you deposit $100,000, you get $250 back. And it's within the first 90 days. So you might start off by depositing $1,000, but if 2 months later you deposit $10,000, then in total you've deposited $11,000, so you would actually get about $50 back. But I also have another referral code below. If you want, you can get $50 of commissions for free. So $50 of trades for free. So if you know that you're going to be depositing less than $10,000, then maybe it's best that you take the $50 commission free trades. But if you're depositing more than $10,000, then it's best to use the first referral code, the long one here, the 5967, because you'll be getting cash back instead. So if you're depositing more than 25,000, then it's worth using the long one because you'll get 75,000. Well, it's up to you. Both referral codes are available. Choose the one that benefits you more. Thanks for watching.